We're now 6 weeks into the new year, and the winter is still heavy on much of the country, but we can see the spring housing market taking shape. Here are the big trends that the data is highlighting for us now. Demand by home buyers is responding to the year's cheaper mortgage rates. Pending sales are inching higher, and the growth rate of inventory is slowing way down. Here's what I'm watching for next. While the week's pending home sales dipped with the deep freeze, that's now thawing out, and I expect home sales growth for the first quarter to stay ahead of last year. We've been averaging about 3.5% more sales now than in 2025. Home prices still have some negative momentum, and mildly improving demand isn't yet enough to change that part of the pattern. There are some early leading indicators that suggest prices aren't in for a big drop soon, but demand hasn't picked up enough yet to really move the needle. Let's take a look at all the details for the week of February 9, 2025. So we'll start today with the supply side. Inventory is now only 8.7% greater than last year. If you are in the group that thinks there's a surge of supply coming, I advise you to watch the data closely. The inventory gap from 2025 is closing every day, from 30% growth in 2025 to 8% now. If this deceleration of supply continues by summer, we could be looking at inventory declines compared to last year. There are 688,000 single-family homes on the market. Last year, there were 632,000. Every day, that gap gets smaller. Last year, inventory was rising very quickly with very high mortgage rates. Rising rates creates rising inventory. Falling rates, falling inventory. That's what's underway now. This is a very different market from a year ago. Despite the easy intuition that there is pent-up seller supply that wants to list into inventory, the opposite is also true. There is pent-up demand from people who want to buy. As conditions improve, we're seeing demand pick up faster than supply. There's no evidence anywhere in the data that supply is going to grow fast this year. In this chart, we have 10 years of inventory trends. At the far right of the chart, you can see today 698,000 single-family homes on the market that fell quickly at the end of the year as interest rates dipped to their lowest level in 3 years. Inventory hasn't yet resumed the climb for this spring, but that'll happen in the next few weeks. This is important because much of the country still has too few homes available. Home sales in places like Chicago, New York, and Boston are still restricted by having too few homes for sale. But it's not just the Northeast. So I've covered Florida a lot recently. In case you missed it, Florida now has fewer homes for sale than last year at this time. These are not the conditions that indicate a sudden flood of inventory. So are there any signals that we could get some inventory growth in 2026? Well, I continue to think that the relist data is the most important thread of the year. One reason inventory is low now is because frustrated sellers pulled listings last year to wait and try again. So we tracked those withdrawals last year, all last year, in fact, and those sellers are now starting to reemerge and try again in the spring housing market. So that's why we're tracking the relists now. There are just under 75,000 single-family homes relisted from last fall. There's another 20,000 condos that are currently relisted. So in this chart, each bar is a week. The taller the bar, the more relisted homes are on the market at any given time. The blue bars for the year are taller than the bars from 2025. Now, it's not a surprise that there are a lot of relists now because there were a lot of withdrawn listings last year. So we're watching these relists because we want to know if they'll lead to greater supply, more inventory, and therefore softer pricing. If not, do these relists tell us something else about the market? So if these relists are investors or second homeowners, if they are distressed sellers or banks with foreclosures, then the relists will add to the active inventory numbers. If the relists, on the other hand, are primarily owner-occupiers, then these sellers also want to buy a new home. They want to move up or move down or move across town. These sellers also buy a home, and so the relist does not add to active inventory. Sell one, buy one. If owner-occupiers dominate the relisters, then the relist rate should climb, but inventory will not. If you look at the data now, you'll see that's the pattern we're in. The relist rate is up 11% compared to 10% last year. But inventory was growing much faster last year. Relists, as of now, do not appear to be driving supply. It looks to me like these relists are two transactions, a sell and a buy. If so, that means we should see the weekly pending sales data climb too. Do we? Well, yes, mostly. The pending sales data, in fact, dipped a little this week as half the country is still climbing out of the deep freeze. Year to date, though, home sales are 2.6% ahead of last year. There were around 55,000 single-family home sales contracts started this week, the weekly pending sales. That was a dip of nearly 6% from last week. In the winter, it's common to have a storm week. The spring market hasn't really taken off yet, so none of this is out of the ordinary. It is notable, though, that this is the first week of the year where sales came in below 2025. So in this chart, I'm showing the average weekly pending sales rate for 2026 in blue compared to last year, averaging 55,000 per week now compared to 53,000 per week last year. We have not had any big jump in sales to report. The sales are just inching ahead of last year. Compass has been forecasting about 5% sales growth for the full year, and so far there is nothing in the data that makes me want to update that forecast in either direction. Demand is better now. This week shows it's hard to buy a house when you don't want to leave your house and dig out of the snow, but that weather system is passing, and so we will see what comes next. Home prices continue to show little, if any, growth over last year. The median price of single-family homes in the U.S. is currently $388,475. This is looking at the homes that are the newly pending contracts so far. So this is the price that people are paying for homes, and it's barely 1% higher than a year ago. In this chart, each line is a year. The left end of the chart is the blue line for 2026. Prices will climb for the next several months before reaching the seasonal peak around $400,000 later this summer. As of now, there's nothing in the data that suggests home prices would climb more than that. I've shared lots of data recently that measures home prices lower than last year, outright price declines. So, for example, the asking price per square foot for all homes right now is 1.7% below last year at this time. Keep in mind how unusual that is over history. Most years, home prices climb by 4, 5, 6% per year. So this current environment where home prices are flat or down is very unusual. It's not unexpected. However, we've been talking about these oncoming trends for over a year, and that's why we do this work every week. We're now in a place of rising demand for homes. Is it enough to change this negative price momentum? There is one leading indicator which is pointing in that direction, but it's very early. The percent of homes on the market with price reductions is a really useful leading indicator of future sales prices. It tells us about relative levels of demand right now. Most measures of home prices really have to wait until after the sale completes. That's why most headlines about the market are only now showing December data. But if a house is on the market now and it doesn't get any offers, those sellers tell us demand is weak by cutting their asking price. A house is on the market now, takes a price cut late February, it gets an offer in March, the deal closes in April or May, and normally you start hearing about that data in June. But we can measure right now how many sellers are cutting prices. And right now, the number of sellers cutting prices is declining. This is an indication of demand slightly improved. There are 32.4% of the homes on the market that have taken a price cut from the original list price. That's down 50 basis points for the week, and it's 90 basis points lower than last year this time. It's falling now when last year it was on the way up. This tells us that demand is improving this spring, where last year demand was deteriorating. You can see that trajectory of the blue line here at the left end of the chart, dipping down still. Home buyer demand is obviously improving. Is it enough to reverse the negative price pressures? So in my opinion, not yet. If demand continues to improve this spring and this price reductions line dips, say, below 30, that would be an indicator that there is sufficient demand and some sellers will take advantage with stronger pricing. But as of now, the price reductions data shows us that demand is improving, but improving from a super slow 2025. So buyers are still in the driver's seat in most of the country. This shows us, though, that some buyers have recognized those conditions. So to sum up the week, inventory and new listings are down because of the deep freeze. That's finally thawing now, so data in the next couple of weeks will pick up. Demand is definitely better this spring than last, and even though demand is picking up, supply is still sufficient to suggest that prices will continue to be soft for a while. All right, that's all the data we have time for this week. More next week.